Hello friends, welcome back to the channel Value Learning. Today we are going to discuss Schedule 2 of the CGST Act. It basically lists out activity or transactions to be treated as supply of goods or supply of services. But before we understand the meaning and intent of Schedule 2, let's go back to the bit of history of GST. In the pre-GST era, tax on sale of goods was charged by the state government, whilst tax on services were charged by the central government. In the pre-GST era, a major dispute involved the transfer of software. As an example, state authorities wanted to classify these as goods and levy VAT, while the central government considered them as services and was subject to service tax. So the Indian constitution defined goods very broadly to include all movable property, but it didn't specifically mention software. This opened the door for two competing interpretations, like the state's view. States argued that since certain software can be bought, sold, stored, and possessed, it fits the definition of goods and should be subject to VAT. Whilst center view was that the transaction is a service because it involved licensing or development and making it subject to central service tax. In a lot of cases, courts spent years fighting over it, whether the transaction was a sale or service, and therefore both VAT and service tax was charged, as there was a lot of confusion to their classification. You may be surprised to know that even restaurant service was a major dispute earlier as to whether it was subject to VAT and service tax, and therefore both taxes were leviable. The state governments disputed that food served in the restaurant is a good, whilst the central government argued that the ambience and the dining experience involved makes it a service. So under GST, government decided to clear such confusion and end these court fights by stating each litigative activity under old regime and stating if it is a sale of good or supply of service. Such activities are specifically mentioned here in this schedule, Schedule 2. But why do we need to classify now under GST? Because you will say GST is a goods and service tax. That means whether it's a goods or a service, GST will apply. It is one tax, one nation. But no, we still need that clarity. Why do we need that? Basically to understand the classification and the rate of tax that will apply on that classification. Because we have a slab system, GST slabs, and there are different rates for different type of transactions. If there would have been just one GST rate, which is nearly impossible in India to happen, we would not have needed this bifurcation now under GST. But as we do have this GST slab rates and every type of transaction has different kind of rates, it is still necessary to understand whether we need to classify a transaction as supply of goods or services. So you will see like goods like clothes and gadgets may have rates from 0% to 40% based on what they are. Likewise, services like cab rides and hotels will usually have a standard rate of 18%, but certain essential services like education and healthcare will be exempt. So if you classify wrong, you pay wrong tax. This leads to notices and penalties. So it is still important to understand the correct classification between goods and services. And note as a disclaimer, this table is subject to change as per the changes made by the government from time to time. You may note that Schedule 2 is divided into 6 paras. So let's discuss each para one by one. So para 1 of Schedule 2 deals with transfer and it clarifies if a transaction is a supply of goods or services. So the clause A of para 1 says, any transfer of the title in goods is a supply of goods. What does that mean? If there is a transfer of title, that is a supply of goods. That means a standard sale where ownership transfers immediately. Title of goods has been transferred and therefore it is goods. For an example, a customer buys a book from your store and it pays the full price of it. Then the title passes to the customer. And it can be said that goods have been transferred or supplied. Clause B says, any transfer of right in goods or of undivided share in goods without the transfer of title thereof is a supply of services. Now it's basically saying transfer of right to use. is a supply of service. This is a common confusion point. So, if you own a library and hand over a book to a customer for temporary use, that is rental purposes, without transferring its ownership, it is a service. It is not a transfer of goods. It is a provision of service. Then clause C. Any transfer of title in goods under an agreement which stipulates that property in goods shall pass at a future date upon payment of full consideration as agreed is a supply of goods. So it is basically talking about this hire purchase kind of transaction. It says this hire purchase kind of transaction is also supply of goods. This involves an agreement where ownership transfers only after the final payment is done. Think of a car on finance. The dealer is supplying goods just at a future date. So before GST, lawyers made crores fighting over whether a software is a good or a service. The government got fed up. So they introduced the Schedule 2 with one clear intent. Look at the paperwork, not the item. If the invoice says ownership passes, it is basically goods. If it says only right to use, then it's service. So basically, if you know this intent or if you get this intent, then you will never forget this para, right? Now let's take some examples of this para. So a transaction is selling a pen. Will the title be transferred? Yes. Now if you sell a pen and you get money, the title is immediately transferred. So it is a supply of goods. Now renting a car. Is the title transferred? No. It's just for a right to use, right? So it is a service. Hire purchase of machinery. Yes. The ownership will pass at a later date. So it will become supply of goods. Sale or return of toys. Yes, initially the goods have been sold, right, and the ownership passes at that time, so it is also goods. Watching a YouTube video, no, it's just one time view, right? So it's a service. You don't pass the right of that. Downloading an ebook permanently. Yes, it's a like you get a copy permanently, you have that with you, then it is a good. Attending a live webinar. If you can't take the recordings and you're just allowed to attend at that point of time, then it's just access only, right? So it's just a service. Now let's discuss what is para 2 of Schedule 2. It basically talks about this land and building. So let's understand it. So if someone gives you money to use your land and building for a month, it's a service, right? In para 1, right to use. It's like giving a car on rent. But if you sell the entire plot forever, that's outside GST. It's simple. Right to use versus outright sale concept here. And that's what this para 2 is all about. So the core principle is for lands and buildings, almost everything involving is a right to use. Then it is a service. Only the outright sale of a land or a completed, note the word completed building, is outside the scope of GST. So the law states the following are supplies of services, that is A. Any lease, tenancy, easement or license to occupy land is a supply of service. So the first clause talks only about land here, and it talks about any lease, tenancy, easement, license is a supply of service. While clause B says any lease or letting out of a building, including a commercial, industrial or even a residential complex for business or commerce, either wholly or partly is a supply of services. If you're putting on lease and you're getting something in return, some money and all, then that means you're providing a service. So again, you remember the golden rule from para 1, it was all about transfer of title. And para 2 is even simpler. If you let someone use your land or a building and not transfer ownership, it is a service. Now let's take some examples of para 2. First is renting a shop or an office. Again, it's a service. Then leasing land for business. Again, it is a service. Selling a vacant plot, that is just a vacant plot or a land. It is neither goods or service. Outright sale of a completed building or a land is neither goods nor service. Selling an under construction flat, it is a service because You are not selling a completed building here. You are selling an under construction flat. So it is still subject to GST. Like you are selling construction service here. So it will be treated as a service. Now what is para 3 of schedule 2? It says any treatment or process which is applied to another person's good is a supply of services. So the key word here is another person's good. Ownership of goods never transfers to the person who does the job. Just they are applying the skill or labor to that goods that belong to someone else's. So here, if you're working on someone else's goods, then you are supplying a service. It is not a supply of goods here. So para 3 applies only when the ownership or the title never transfers to you. You are merely applying skill, labor or process to goods that belongs to your customer, and the goods are returned to the owner after you process on it. So this one is also simple. You should always remember the golden rule from para 1, that is transfer of title is goods. Now para 3 is opposite. You are just working on someone else's goods. You are not selling them your product. You are just selling them your skill, labor or a service. So whether you are dyeing fabric, polishing diamonds, printing a book or assembling components, if the goods belong to your customer, then you just process them. It is a service. The classic example is job work. A job work like a situation, let's discuss. It means a jeweler sends gold to a goldsmith for polishing and crafting into jewelry. The gold belongs to the jeweler. The goldsmith is just providing a service on it. Under GST, this is a supply of service, not goods. So, para 3 doesn't look at the process. They look at the ownership. If the goods are yours, it's goods. If the goods are someone else's and you just work on it, it's service. It's just simple as that. Now, let's take some examples here of para 3. Jeweler sends gold to goldsmith for polishing jewelry. Who owns the goods here? Basically the jeweler. He's the principal here. So whether this is a supply of service or goods by the goldsmith, it's just a supply of service. Textile dyeing unit dyes fabric for a textile mill. So who owns the goods here? The textile mill. The textile dyeing unit just provides the dyeing services. So it's a service. You buy raw gold, make jewelry and sell it. So you are basically the manufacturer. You buy it, you make on it and then you sell it. So it's a supply of goods. You repair a customer's washing machine. So who owns the goods? The customer. And you are just providing your repairing service on it. So it's a service. You print a book for a publisher. Who owns the books? The books, trademark, patent and everything? The publisher. And you are just providing a printing service. So it's just a service here. Now let's understand para 4 of schedule 2. So if you take a company laptop home for personal use, are you selling it to yourself? Does GST apply? Remember in schedule 1 we had already discussed, and we know that when business assets are transferred out of business, even without no money changing hands, it is still a taxable supply. But para 4 of schedule 2 says that which type of transaction is a supply of goods and supply of services. The classification basically depends on how and why the goods leave. That means how and why the business assets were transferred. So let's read para 4 clause A. It says transfer of business assets, where goods forming part of assets of a business are transferred or disposed of by or under the directions of the person carrying on the business, so as no longer to form part of those assets. Such transfer or disposal is a supply of goods by the person. Before that, I'll just remind you again that business assets are basically those assets where that business has claimed input tax credit on it. So, when business goods are sold, scrapped or permanently removed from business, then it is a supply of goods. Whether or not consideration is received, it will still be a supply of goods and GST will apply. So in this picture, you can see a shopkeeper is selling an old fridge. So even if it is sold for a loss, it is still goods. Now let's discuss para 4 clause B. So what does the rule says? Transfer of business assets where by or under the directions of a person carrying on a business, goods held or used for the purposes of the business are put to any private use or are used or made available to any person for use for any purpose other than the purpose of business. The usage or making available of such goods is a supply of services. That is, when business assets are used for private purposes and not business purposes, it is treated as a supply of services. Example, an owner takes a company car for a weekend trip. That's a service being provided to themselves. So you can also see in the pictures, a laptop on office desk is basically business use, so no GST. But if you take that laptop on a beach for your own personal use, you have to pay GST on that service. But this is just a rule, but practically it seems a bit absurd to me, as when will the business owner show this usage in his books and pay GST on it? Now let's discuss para 4C of Schedule 2. So the law says transfer of business assets where any person ceases to be a taxable person. Any goods forming part of assets of any business carried on by him shall be deemed to be supplied by him in the course or furtherance of his business immediately before he ceases to be a taxable person, unless the business is transferred as a going concern to another person, or 2. The business is carried on by a personal representative who is deemed to be a taxable person. So basically, this situation deals with business closed down. It says that a closure of business will be treated as a deemed supply of goods here. But let's discuss in more detail. So if you close restaurant forever, do you have to pay GST on the leftover furniture and food? And if you sell the entire restaurant to someone else who keeps it running, why would that be any different? Basically, the golden rule. GST only cares about the end of the chain. If the chain breaks, business shuts down, then tax is due. If the chain continues like it's a going concern, then no tax is due. Take a detailed example. Let's say Ravi owns a pizza parlor. He decides to retire and shut the business forever. He has a pizza oven of 1 lakh rupees. He has furniture of 50,000 rupees. He has raw materials of 20,000 rupees. He doesn't sell anything, just locks the door and goes home. What GST says? On the day he deregisters, he is deemed to have supplied all these assets as goods. He must pay GST on the market value. He files a final return and pays tax. Why? The business chain ends here. These assets were purchased with input tax credit. If Ravi doesn't pay GST now, the government loses the tax forever. So the law deems a sale to collect the due tax. Now let's take another scenario. Instead of shutting down, Ravi sells the entire restaurant, oven, furniture, recipes, staff, contracts, goodwill, everything to Priya for rupees 5 lakhs. Now Priya continues running the same business parlor with the same staff and suppliers. She only takes over Ravi's GST registration. What GST says? This is not a supply. No GST is payable on this 5 lakh rupees. Why? The business chain continues. Priya steps into Ravi's shoes. The assets doesn't leave the taxable stream. They just change hands between registered persons. GST registration transfers and ITC is carried forward and customer will get taxed when they buy pizza going on. So there is no revenue loss to the government here. Now let's take some para 4 examples. First activity. Selling old office furniture. Yes, it's a depreciated assets and it has been sold, so it is goods. Gifting a company's laptop to an employee. Again, it is a business asset and it has been transferred. It is a good supply of goods. If it was destroying expired stock. Yes, again, because stock was business asset and it was disposed of, so it is also a supply of goods. Selling personal car. So no, because it's not a business asset here, so it is not a supply. So another activity is transferring asset to another branch outside GST. So again, it is a business asset and it is sent to someone, some other branch which is not subject to GST, that is a non-taxable person. So again, it is a business asset which has been transferred, so it is a supply of goods and GST will apply. Now let's discuss what is para 5 of schedule 2. So para 5 basically lists 6 specific activities that are deemed supplies of services by law, even though they may not feel like the traditional services. So let's discuss one by one each of those. So para 5A says renting of immovable property. Again, renting, we also discussed in, I think, which para we discussed? Para 2, right? We also discussed in para 2, renting of immovable property is a service. So shop, office or land, anything which is rented, it's a service. So you are letting someone, you are giving a right to use of that property and you are not selling it. Then para 5B, it says construction of a complex or a building or a civil structure. Construction of a complex, building or a civil structure intended for sale to a buyer, wholly or partly, except where the entire consideration is received after issuance of completion certificate. So basically it is talking about builder selling an under construction flat. So it's a service during construction. Sale, it becomes a sale only after the completion certificate is provided. It will be considered as a sale of that building, completed building. And remember, completed building is neither sale of goods nor supply of services. So no GST will apply. Before that, when there is an under construction flat which is sold by a builder, then it will be a service during construction and it will be a supply of service. Now let's discuss para 5C. Talks about temporary transfer of IP rights. So the rule says temporary transfer or permitting the use or enjoyment of any intellectual property right. So let's take a simple example. Licensing a patent or trademark for 2 years is just right to use, right? It's a temporary transfer. Again, you're giving a permission to use. So you're not selling the IP itself. So it is a supply of service. Then para 5D, it basically says development, design, programming, customization, adaptation, upgradation, enhancement, implementation of information technology software is a service. So if it is an IT software service which involves customization, software, upgrading, implementation, etc., it makes it a service. You're making changes to existing software, that is a service. Then para 5E, what does it say? Para 5E, the law says agreeing to the obligation to refrain from an act or to tolerate an act or a situation or to do an act. So let's discuss this in a bit more detail. So it is also known as the contract clause. So it is simple. It is based on that Indian Contract Act. A promise for a promise with consideration. So there are basically 3 parts of it. So first is agreeing to refrain from an act. So let's suppose a builder gets paid by a housing society to not build that extra floors that would block sunlight to its building. So he is refraining from doing something that he could legally do. So he is getting some consideration out of it. So this is again a supply of service. Now there another part. It says agreeing to tolerate an act. Let's suppose a shopkeeper allows a hawker to operate in front of his shop for monthly payment. He's tolerating an act he could otherwise object to, right? So it's also an act of service, supply of service. Now again, part 3, agreeing to do an act. Let's take an example. Factory installs zero emission equipment voluntary. The neighbors pay for it, even though legally not required. They are doing an extra act for consideration. So it is agreeing to do an act. So it is also a supply. But many students think any payment under a contract is taxable under 5E. That is wrong. Some things are not covered, like liquidated damages for breach of contract, penalties, fine, cancellation charges, late payment fee, or check dishonor penalties. Why? Because these are compensation for not tolerating an act. They are meant to deter breaches, not to pay for tolerating them. The key requirement: there must be an express or implied agreement and a direct nexus between the payment and the act of tolerating or refraining. So there is a CBIC circular also which clarifies that para 5e only applies when there is an independent contractual agreement to do, refrain, tolerate for a consideration. A penalty for breaking a contract isn't consideration for a service. It's just an event in a contract. So though this is not part of your syllabus, but I just wanted to clarify this part as well. Now let's discuss para 5f. It says transfer of the right to use any goods for any purpose, whether or not for a specified period, for cash, deferred payment, or other valuable consideration. So what does it say? It's basically saying any activity to transfer of right to use any goods. The right to use any goods. So let's suppose we can take an example, renting a generator or a coffee machine. So you're giving a temporary right to use it temporarily and you're not passing the ownership. So it is a supply of service. Now let's take some para 5 examples. The activity is renting a shop for business. Again, it is a service. Selling under construction flat. Again, service. That is, we already discussed it earlier. It's a construction services being provided. Selling completed flat. It's under Schedule 3, not a supply of goods or services. Selling vacant land. Again, part of Schedule 3, not a supply of goods or service. You sell your trademark outright to someone. That means you give the right, a permanent transfer. So it's a good. Music label gives streaming rights to Spotify for 1 year service. That is temporary transfer. So it's a service. You implement and install accounting software. Service, its implementation of a software is a service. You provide annual maintenance support for software. Again, service. It's an ongoing service. You buy MS Office CD from a store. So it's just good. It's the off the shelf. There is no customization or anything. Factory installs extra pollution control equipment voluntarily and neighbors pays for it. Service. It is agreeing to do an act. A company pays a competitor to not enter a specific market. It's a non-compete agreement. It's again a service because it is agreeing to refrain from an act. Shopkeeper allows a hawker to sit outside for monthly payment. It is a service for tolerating an act. Renting a coffee machine to a cafe. Again, it is a right to use, so a service. Now let's understand what is para 6 of Schedule 2. It talks about composite supply. So let's suppose I paid for one thing but got multiple things. What's the tax rate? So you go to a fast food joint and order a burger combo of rupees 200. You get a burger, fries and a drink, all for one price. If the burger is, let's suppose, 5% GST and the drink is 18%, how much tax do you pay? Do you split the bill or you calculate separately? The answer is no. You pay just one tax rate, the rate of the burger, which is the main thing. So composite supply is if two or more supplies are naturally bundled in the ordinary course of business and one is the principal supply, that is the main thing, then it's a composite supply and the whole supply takes the tax rate of that principal supply. But we will discuss on composite supply and mixed supply separately. But for the purposes of this schedule and this para, let's just discuss this para 6a and para 6b. It just says, the para 6a says works contract is a supply of service. Basically what a works contract? It's AMC contracts, that annual maintenance contracts. So any material supplies which are provided through this works contract will be a composite supply, but this works contract thing will be treated as a supply of service instead of determining rate of each good and service separately in this structure. Then para 6b says supply by way of or as part of any service or in any other manner whatsoever of goods, being food or any other article for human consumption or any drink other than alcoholic liquor, because alcoholic liquor for human consumption is outside GST, right? where such supply or service is for cash, deferred payment, or any other valuable consideration, will be a supply of service. So it's basically, in a nutshell, telling about all restaurant service and catering service. It should be classified as supply of service. That's it for today. I hope this makes the intention behind crystal clear. If you found this helpful, smash that like button and subscribe for more GST insights. Keep learning, keep growing. See you in the next video.